Welcome to our deep dive today. We're going to be time traveling
Yeah.
to December 17th, 2024,
Back to the
for a
future.
snapshot
All right.
of what's going on in the global financial market.
We're going to be examining everything from stocks,
Everything.
Bitcoin's price,
Yeah.
the price of oil,
Oil.
gold,
Yeah.
you name it.
So this is like your cheat sheet
Absolutely.
to understanding what's going on and what's driving these movements.
The forces at play.
Yeah, it seems like the markets are sending some mixed signals today. A little hesitant almost.
Yeah, they're a bit indecisive, aren't they?
Yeah.
A bit hesitant.
Asian markets are a mixed bag. Europe's looking pretty subdued. And the U.S. is down just slightly.
Slightly.
What's the story there?
Well, there are definitely some worries about China's economic slowdown.
Okay.
Their latest consumption numbers have come in a bit weaker than expected, and that's causing some anxiety.
That makes sense.
Yeah.
But the U.S. economy seems to be doing well overall, right?
It is, but even in a strong economy, certain sectors or global events can cause volatility.
Right.
And a good example of that today is Nvidia,
Right.
one of the tech giants, and it's actually one of the stocks that's pulling the U.S. market down today.
So it's not all smooth sailing, even when the overall picture seems positive.
Right.
Speaking of interesting movements, Bitcoin is making headlines today, surging past $107,000.
Big jump.
What's driving this crypto frenzy?
Well, I think there are two things really fueling this surge. First, there's speculation about potential crypto-friendly regulations from the incoming Trump administration.
Ah, so the political winds can really shake things up in the crypto world.
Absolutely.
Yeah.
And the second driver is the influx of institutional investors.
Okay.
Big players starting to see Bitcoin as a legitimate asset, and that's pushing prices up.
So is this a sign that crypto is finally hitting the mainstream? Or is it still a risky bet?
It's definitely moving in that direction, but it's important to remember that crypto is still a relatively new asset class. It's susceptible to big swings based on things like, government regulations and investor sentiment.
All right, let's shift gears and look at oil and gold. Oil prices seem fairly stable right now, while gold is dipping a little.
A little bit.
What's your read on these commodities?
Oh, oil stability, I think, might be temporary.
Okay.
The upcoming Federal Reserve meeting is causing some uncertainty.
Okay.
And I think investors are also watching China's demand very closely.
Okay.
As for gold, it's down slightly today, but it's still on track for a stellar year.
Yeah.
Up almost 30%.
Wow, that's impressive. Is this a good sign, or should we be reading between the lines here?
Well, gold often acts as what we call a safe haven asset.
Okay.
When investors get nervous about the economy, they tend to flock to gold.
So its strength this year could actually be a reflection of underlying anxieties in the market.
Yeah, I think that's a fair interpretation.
Fascinating. And speaking of anxiety, let's talk about the Fed.
Yeah.
They're expected to cut rates.
Yeah.
But there's buzz about a hawkish cut.
Right.
What does that even mean?
It means the Fed is in a tricky spot.
Oh, wow.
They want to lower interest rates to support economic growth, but they're also worried about inflation getting out of control.
So they're trying to stimulate the economy without letting things get too heated.
Exactly.
Okay.
So a hawkish cut is their way of signaling that they're willing to lower rates, but they're also proceeding with caution.
Right.
It suggests that they might not cut rates as aggressively in the future.
That makes sense.
Yeah.
But what are investors making of all this? Are they buying into the Fed's approach?
Well, a recent Bank of America survey revealed that fund managers are heavily invested in U.S. stocks right now,
Okay.
just like they were before previous market downturns.
Oh, that doesn't sound promising.
Well, it suggests there might be a disconnect between the current optimism in the market and the potential risks lurking beneath the surface.
Right.
This kind of situation is often a recipe for a market correction.
Yikes. So while some investors are feeling bullish, it sounds like there's a growing sense of unease bubbling under the surface.
I think that's a fair assessment.
Okay, let's zoom in on some specific stock action.
All right.
Nvidia is still sliding downward. Broadcom is soaring after a strong earnings report. And Tesla, well, Tesla's being Tesla and hitting new all-time highs.
Each of these stocks tells a different story about what's happening in the market.
So even if the overall market is down, individual companies can still see significant gains.
Absolutely.
Okay.
Nvidia, despite some positive notes from analysts, is facing concerns about being overvalued,
Okay.
which is why it's dropped into what we call correction territory.
So even when the experts are optimistic, the market doesn't always follow suit.
That's right.
Broadcom, on the other hand, is reaping the benefits of its strong performance.
Yes.
Their earnings report was impressive.
It was.
And analysts are giving them positive ratings,
Yes.
which is driving that stock price up.
Exactly.
It's good to see that solid fundamentals still matter in this market.
Absolutely, they do.
And then there's Tesla, seemingly defying gravity as usual. What's driving this incredible run? Is it all hype, or is there substance behind it?
It's a mix of both.
Okay.
There's no denying the cool factor surrounding Tesla and the power of their CEO's personality.
Yeah.
But they're also delivering on real innovation.
So it's not just smoke and mirrors.
No.
They're actually achieving significant things in the electric vehicle and tech space.
They're making huge strides in electric vehicle technology, battery production, and even autonomous driving.
Wow.
They've also gone global, building a loyal customer base all over the world.
Impressive. But even with all that, some analysts are still skeptical about Tesla's valuation, right?
That's true.
Okay.
Some analysts argue that the stock is overvalued based on traditional financial metrics.
Right.
But Tesla's supporters counter that those traditional metrics don't capture the company's long-term potential and disruptive power.
It's like they're playing a different game with different rules.
In a way, they are. Tesla is pushing the boundaries of what's possible in the auto industry, and that makes it difficult to evaluate them using traditional methods. It's a high-risk, high-reward situation.
Sounds like Tesla's a company you need to either fully embrace or completely avoid. There's not much middle ground.
That's a pretty accurate assessment, and their stock price reflects this polarization.
Yeah.
It's a volatile ride, but those who believe in Tesla's vision see huge potential rewards.
Okay, so we've got Tesla shaking up the auto industry,
Right.
the Fed trying to find the right balance, and global markets reflecting a mix of optimism and anxiety.
Yeah.
What's the overall takeaway here? What should our listeners be thinking about as they navigate this complex landscape?
Well, I think the key takeaway is that being informed is crucial.
Okay.
The more you understand about the forces driving the markets, the better equipped you'll be to make smart decisions.
Don't just blindly follow the headlines. Try to understand the why behind the movements.
Yes, exactly. And don't be afraid to ask questions and challenge assumptions. The financial world can be confusing, and there are always different perspectives to consider.
It's all about staying curious and informed.
Precisely. And remember, there's always more to learn. The financial world is constantly evolving, so staying engaged and being adaptable are essential.
So with all that said, what does this mean for you, the listener? How can you apply these insights to your own financial decisions? Let's discuss that in the final part of our deep dive.
Looking forward to it. So remember we talked about Asian markets being kind of split?
Yeah, let's dive into those details.
All right, well, in Australia, the S&P ASX 200 index closed up a solid 0.82%.
That's a pretty decent gain.
It is.
What's driving that?
It's largely due to their energy and materials sectors. So think mining, energy production, those industries are really benefiting from the fact that globally energy and raw materials prices are high.
That makes sense. High demand usually means higher prices, right?
Supply and demand.
What about Taiwan? They were also up, weren't they?
Yes. The TAIEX in Taiwan rose by a more modest 0.3%.
Still a positive move. What's behind that one?
Their tech sector is the main driver there,
Okay.
particularly semiconductor companies.
Yeah.
They're in high demand globally.
So we've got Australia riding the commodities wave and Taiwan holding strong in tech.
Right.
What about Japan and Hong Kong? They were down, weren't they?
They were Japan's Nikkei 225 index slipped by 0.15%,
Okay.
largely due to concerns about the global economic slowdown.
Okay.
I think the impact of China's sluggish growth is making investors nervous.
So those ripple effects we talked about earlier are starting to show up.
Yes.
One country's economic slowdown can impact businesses around the world.
Absolutely interconnectedness.
Yeah. And in Hong Kong, the Hang Seng Index fell by 0.6%.
Right.
A bit steeper drop than Japan. What's happening there?
It's a combination of factors.
Okay.
The global slowdown worries are definitely playing a role, but there are also those ongoing political tensions and uncertainty surrounding China's future policies.
It's a reminder that geopolitics can have a huge impact on market movements,
Oh, absolutely.
especially in a region as interconnected as Asia.
Right.
Okay, let's zoom back over to Europe. You mentioned it was subdued, but what does that look like in terms of actual numbers?
Well, the Eurostoxx 50 futures, which track 50 of the largest companies in the Eurozone, were down 80.16% in early trading.
Okay, so a slight dip, but nothing too dramatic.
Right.
What about Germany? They're a major player in the European economy.
They are. Their DAX futures were also down, but even less so,
Okay,
just 0.06%.
interesting. And the UK,
FTSE futures were down 0.24%.
So it seems like European markets are reflecting that same sense of caution we're seeing elsewhere.
Yeah, a little bit of wait and see.
Not huge drops, but definitely a sense of holding back.
Yeah, exactly.
Interesting. Even some pretty significant political developments haven't had a major impact on the market.
Yeah, that's right.
Really? Give me an example.
Well, for instance, the German parliament just withdrew confidence in Chancellor Olaf Scholz.
Wow.
You'd think that would cause a stir, but the market reaction has been pretty mild.
Wow. That's surprising. A major political shakeup, but the markets are barely reacting. Why do you think that is?
It seems like investors are more focused on the bigger economic picture right now, especially those upcoming decisions from central banks.
So short-term political dramas are taking a backseat to long-term economic concerns.
I think so.
Speaking of which, let's circle back to the U.S. and that hawkish cut from the Fed.
Right.
It sounds like they're walking a tightrope trying to balance competing priorities.
They are indeed.
Yeah.
They're trying to find that sweet spot between stimulating the economy and keeping inflation under control.
I imagine that's a tough balancing act.
It is.
What does this hawkish cut actually look like in practice?
Well, in this case, it's a 25 basis point reduction, bringing the target federal funds rate down to a range of 4.25% to 4.5%.
Okay, so a quarter-point cut.
Right.
But it's the message behind the cut that's really important, right?
Exactly.
Okay.
The Fed is signaling that they're willing to act, but they're also proceeding cautiously.
Makes sense.
Yeah.
Okay, let's talk about a company that never seems to play by the rules. Tesla. They're constantly hitting new all-time highs, even when the overall market is shaky.
Tesla's performance is fascinating. I think they've really managed to tap into something special.
Yeah.
They've captured the attention of investors and the general public.
What's driving this incredible run? Is it all hype, or is there substance behind it?
It's a mix of both.
Okay.
There's no denying the cool factor surrounding Tesla and the power of their CEO's personality, but they're also delivering on real innovation.
So it's not just smoke and mirrors.
Right.
They're actually achieving significant things in the electric vehicle and tech space.
Exactly. They've made huge strides in electric vehicle technology, battery production, and even autonomous driving.
Wow.
They've also gone global, building a loyal customer base all over the world.
Impressive.
Yeah.
But even with all that, some analysts are still skeptical about Tesla's valuation right now.
That's true. Some analysts argue that the stock is overvalued based on traditional financial metrics. But Tesla's supporters counter that those traditional metrics don't capture the company's long-term potential and disruptive power.
It's like they're playing a different game with different rules.
In a way, they are.
Yeah.
Tesla is pushing the boundaries of what's possible in the auto industry, and that makes it difficult to evaluate them using traditional methods.
Okay.
It's a high-risk, high-reward situation.
It sounds like Tesla is a company you need to either fully embrace or completely avoid.
Right.
There's not much middle ground.
That's a pretty accurate assessment. And their stock price reflects this polarization.
Yeah.
It's a volatile ride, but those who believe in Tesla's vision see huge potential rewards.
Okay, so we've got Tesla shaking up the auto industry, the Fed trying to find the right balance, and global markets reflecting a mix of optimism and anxiety.
It's a mixed bag, isn't it?
What's the overall takeaway here? What should our listeners be thinking about as they navigate this complex landscape?
The key takeaway is that being informed is crucial. The more you understand about the forces driving the markets, the better equipped you'll be to make smart decisions.
Don't just blindly follow the headlines. Try to understand the why behind the movements.
Exactly. And don't be afraid to ask questions and challenge assumptions.
Yeah.
The financial world can be confusing, and there are always different perspectives to consider.
It's all about staying curious and informed.
Precisely. And remember, there's always more to learn. The financial world is constantly evolving, so staying engaged and being adaptable are essential.
So, with all that said, what does this mean for you, the listener? How can you apply these insights to your own financial decisions? Let's discuss that in the final part of our deep dive. All right, so welcome back to the final part of our December 17th market deep dive.
Yeah, we've covered a lot of ground, haven't we? Global market trends.
Yeah, we have
Specific stock movements.
the Fed.
The Fed's latest decisions.
Now it's time to bring it all together
Right.
and talk about what it means for you, the listener.
Yeah, because all this financial data
Yeah.
is only really useful if it helps you make informed decisions about your own investments.
So let's start with the big picture.
Okay.
What's your overall assessment of the market right now? Are we headed for a boom, a bust, or something in between?
Well, predicting the market is kind of like trying to predict the weather.
Yeah.
There are so many factors at play that it's impossible to be certain.
I hear you on that.
Yeah.
But based on everything we've discussed today, what are you seeing?
Well, I think there are definitely both opportunities and risks out there.
Okay.
The global economy is still growing,
Okay.
which is a positive sign.
That's reassuring to hear.
Yeah.
It's not all doom and gloom.
No, not at all.
Okay.
We're seeing, continued strength in sectors like technology,
Yeah.
healthcare, renewable energy.
Yeah.
And there are always pockets of value to be found if you know where to look.
So there's potential for growth, but what about the risks?
Right.
What should investors be cautious about?
I think one concern is overvaluation, particularly in certain segments of the U.S. stock market.
That irrational exuberance we
Well,
talked about earlier.
Investors can get caught up in the excitement.
Right.
Drive prices higher than what the underlying fundamentals might justify.
So it's important to keep a level head and not get swept up in the hype.
Absolutely.
Okay.
And we can't forget about geopolitical risks.
Right.
Things like trade tensions,
Yeah.
political instability, unexpected global events.
Yeah.
These can all throw a wrench into the market's gears.
It's a good reminder that the market can be unpredictable.
Yeah.
So how can investors navigate this uncertain terrain? What strategies can help mitigate those risks?
Well, I think diversification is key.
Okay.
You know the old saying, don't put all your eggs in one basket.
Yeah.
Spread your investments across different asset classes,
Oh,
sectors, geographic regions.
Makes sense.
That way, you're less vulnerable to a downturn in any one area.
By spreading the risk.
Exactly.
Yeah.
Don't bet the farm on one horse.
So diversification is key.
Yeah.
What other advice would you give to our listeners who are trying to make sense of this complex market environment?
Stay informed.
Okay.
Stay disciplined.
Yeah.
And don't let emotions drive your decisions.
Yeah, that's a tough one.
It is.
It's easy to get caught up in the fear or the greed of the moment.
Yeah, it happens to the best of us.
But that's rarely a recipe for success.
Right.
So how do you stay disciplined then?
I think having a long-term perspective is really crucial.
Okay.
Don't get fixated on those short-term market fluctuations.
Right?
Focus on your financial goals.
Yeah.
And invest accordingly.
Solid advice.
And remember, there are resources available to help you along the way.
Oh, yeah, definitely.
Financial advisors.
Yeah.
Reputable websites.
Yeah.
Even podcasts like this one
Absolutely.
can provide valuable insights and guidance.
The key is to be proactive and take control of your financial future.
Couldn't agree more.
Well said. Now, before we wrap up, I want to leave our listeners with a thought-provoking question.
Right.
Given everything we've discussed today, what's your outlook on the market in the coming months? Do you see more opportunities or more risks?
That's a good question. Take some time to reflect on what you've learned today
Yeah.
and form your own opinion.
Yeah.
There's no right or wrong answer here.
This deep dive has given you the tools to start thinking critically about the market,
Right?
making informed decisions.
Absolutely.
Remember, the financial world is constantly changing, so stay curious.
Stay engaged.
Stay engaged.
And most importantly,
Yeah.
stay informed.
That's it for today's deep dive.
Thanks for joining us.
Thanks for joining us.